Good afternoon. Thanks for joining us today. We have Sailfish Royalty presenting. CEO Cesar Gonzalez is here to walk us through the story. He was recently appointed CEO. I believe it was about 2 months ago. Is that right, Cesar?
Yeah, that sounds right.
You may recognize Cesar from Mako, where he's VP Corp Dev as well. Before I hand the mic over to him to walk through the story, I will remind everyone that it will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's presentation on their website. And there will be a Q&A section at the end, so feel free to input questions in the Q&A box at the bottom, and we'll get to those towards the end of the presentation. And with that out of the way, Cesar, thanks for joining us.
Thank you, Deb. And I just checked, and the announcement was made on October 29th. That we had those management changes. So just a little over, just a little over a month and a half. Okay.
Well, maybe you could start with a little bit of background on yourself and then walk us through Sailfish.
Sure. So I've been a part of the Sailfish story since the beginning, when my partner Akiba Leisman and I structured a streaming transaction inside of a mining company called Marlin Gold Mining Ltd. That's the predecessor company of Mako. And at the time, this was in, I believe, 2014, we didn't know what this was going to become. You know, we thought it was would be a single transaction. And as time went by, we had the opportunity to do other transactions that were royalty oriented and not mining oriented. And so Sailfish continued to grow. And then in 2017, Sailfish was spun out of Marlin when we acquired the Tocaninzhino royalty. That's a NSR on a property in Brazil operated by Eldorado Gold. And then we did a restructuring of the stream, which added more royalties to the portfolio through an agreement with Marlin, Golden Rain, and ourselves. And then in 2019, last year in the summer, we completed what is a transformational acquisition of a royalty in Nevada on a deposit called Spring Valley. And that was the acquisition of Terrico Gold Corp. So here we are today. What started off with just one streaming transaction as a private subsidiary of a mining company is now a standalone royalty company. As Deb mentioned, in late October, we decided that it made more sense for me to become the CEO so that Akiba can focus his attention on Mako. I'm also part of the Mako team. Akiba is still very much part of the Sailfish team, but to start to create some separation between the two companies and to dedicate more time and effort in the leadership role of a CEO to growing the business and marketing and doing all the fun stuff that a CEO has to do. So and the two of us, both Akiba and I, have been affiliated with the largest shareholder of Sailfish, Wexford Capital, for over a decade. Wexford is an opportunistic investment company. They run a private equity fund, a hedge fund, and their investments in precious metals, I think, were very well timed. We started investing on a controlled basis in the sector in 2012, and then more aggressively in 13, 14, 15, buying assets, buying royalties. And looking back, it was a great time to be investing. I will get into my views on where I think we are in the market cycle, but it's not such a good time to be investing in royalties right now. I'll just come out and say that. I know it's pretty controversial, but luckily we have a portfolio already. I think right now is a better market for consolidation than it is for portfolio accumulation through acquisitions. So I'll talk about that later. Let's go through the forward-looking statements here. It can be read on your own time. And if we go to the summary or the overview, Sailfish provides shareholders with exposure to gold and silver only. We don't have any base metal royalties. We don't have any battery metal royalties or anything like that. It's gold and silver. We have one producing royalty on a project in Mexico, a mine called El Compás, We, through Marlin, used to own El Compas, and we sold it, retained a royalty. And when the stream on San Albino, the Nicaraguan asset, was restructured, that royalty found its way into Sailfish. This royalty helps keep the lights on. It is not a very large royalty. You know, in a good year, it can do a couple $100,000 at today's precious metals prices. But it's on a very interesting piece of land in Zacatecas, Mexico, which if anybody has studied, you know, where most of the world's silver comes from, it comes from two countries, Mexico and Peru. And within Mexico, which is the larger of the two, the state of Zacatecas has some of the most prolific silver mines in all of Mexico. And we have a 1.5% royalty on a small mine, El Compas, which is gold and silver, but it's in a district that is very prospective. So I like that royalty. You know, it's paying today, and who knows, maybe sometime in the future, with the right exploration program, it could become something much larger. And then we have 3 royalties on advanced stage gold projects in Nicaragua, Brazil, and Nevada. And that's really the core and the future of our companies. You know, the royalty in Nicaragua is actually a stream that pays out like a royalty, but from a tax perspective, it's very advantageous to have been structured that way. And that is weeks away from production. You know, a first gold pour, not commercial production. Commercial production will be in early Q2, but that's the stream on the San Albino project, you know, the highest grade open pit on the planet, which we're very excited about, and obviously is inside of our sister company. So I know quite a bit about that, and I will talk about that over the course of this presentation. And then we have a portfolio of other royalties that are more early stage, mostly in Mexico. And we have a couple of royalties around the big project in Nevada. And then we have a silver property in Mexico, in the state of Durango. This is Gavilanes, which we are working on a way of monetizing or spinning that out to maximize value for shareholders. I'll go into that as well. I'm sure you guys will have a lot of questions about that as we you know, finish out the year. I think the expectation was for us to have something more definitive before the end of the year, but you know, things are taking a little longer than we expected on that one. I mentioned Wexford, you know, in terms of Akiba and I being involved with Wexford. So Wexford's the largest shareholder here. They created a royalty company in the oil sector called Viper Energy Partners, which has you know, some of the best acreage in the Permian Basin that it receives royalties on. And so Wexford is not new to the royalty sector. I think at its peak, Viper was about a $3 billion company. Today, it's about a third that size. You know, the oil sector has been pretty beaten up, but that's still a very cash generative business with a high dividend. If this is an important point here, the management directors are major shareholders of the company at almost 10%, and that's including all the in-the-money options that you know, that we have. That also includes the shareholding of a consultant, a former director who is now a consultant. So you add it all up, that's a pretty big stake. And the reason for that is that we didn't feel comfortable, Akiba and I, when we created this vehicle, taking a salary. You know, the cash flow was limited. It was only from that royalty in Mexico on El Compas. And so, we always held the view that royalty companies should be run with as little overhead as possible. If any of you guys on this presentation have ever been a part of a royalty company, or as a director, you know, a major shareholder, or as an officer of one of those companies, you'll know what I'm talking about. You can always hire consultants to do diligence for you, and we work with some great ones. Matt Gray over at Resource Geosciences is a fantastic geologist that can go and look at properties for us. He doesn't have to be part of the payroll. You know, we can hire him when we need him. You know, we've got an operating team over at Mako. If we needed them to take a look at something for us, we could you know, shoot them an email or give them a call. But Sailfish essentially has 3 officers: myself, our CFO, Brian McKenzie, and Akiba Leisman, who's executive chairman. And then we have a controller in the British Virgin Islands, who used to be our CFO, that's Peter Van Zoost. And that's pretty much it. There are a couple of part-time consultants that we use in British Columbia to do things from time to time. But that's pretty much it. We're running this with 4 people, 3 officers, and then the controller. And 2 of us do not take a salary. We're compensated entirely with equity. And I think that's the best way to run this business. Look, if we were generating $15-20 million a year of cash flow, maybe we'd take a little salary because we'd have the cash to be able to fund that. But instead, what we've done with any excess cash that's been on our balance sheet is we've bought back shares. And we've been consistent with that when we've sold non-core assets, when we received cash from the restructuring of the stream on San Albino, we have bought back shares. And it's our intent when we start receiving cash flow from the royalty in Nicaragua, not right away, because it won't, that won't be the commercial size or scale that we need. But in early Q2, when San Albino is in commercial production, that cash flow will also be used to buy back shares. And some of these points I've already talked or mentioned. We have cash flow that is currently coming from that royalty in Mexico, which is set to increase dramatically once San Albino turns on. First gold pour is expected in January, and this is actually a feat. I'm going to pat myself on the back because I'm part of the Mako team as well, but definitely our operating team who are in country doing all the real work. Nicaragua was hit with 2 hurricanes within weeks of each other, and Nicaragua is not a hurricane country. There haven't been too many major hurricanes in the last 100 years. I think I heard Akiba say there was about 7 in the last 100 years, and 2 of them came within a month of each other recently. So even with that, and even with coronavirus, which pretty much shut down, commercial travel, a lot of our deliveries were delayed. We had to push back the first gold pour from September, October. It's January, but it's been January for a while, and that's what it's going to be. So a lot of people will look at the royalty in Nicaragua and say, it's a small mine. There's no feasibility study, and I will push back and tell them it's a small mine inside of a very prospective land package where we have a 2% royalty surrounding that main area where we have the 3%, and it has a team that has built a handful of mines in the last 10 years in Latin America and in the Southwest US, which that is so valuable because there are tons of exploration and development projects globally that actually look quite interesting, but they don't have the people within those companies to actually produce gold, which is at the end of the day why we're all here. And as a royalty owner, that is paramount to me. Exploration success, all that stuff is great, but if the gold never comes out of the ground, I don't have cash flow. And I think that's why Sailfish is traded the way it has, because we only have a small amount of cash flow coming from that royalty in Mexico, El Compas. And now that the cash flow is coming from San Albino, I think we're due for a re-rating. And it would be very nice to have that team that we have at Mako deployed at Tocaninzhino or Spring Valley, to get those things up and running. Unfortunately, we don't own those assets, but for any of the criticism or critics that we have out there on Mako, I would push back very strongly and say, how many junior gold companies have actually gone from exploration to development to production? We're weeks away from that, and I think that's the real value add, and I look forward to receiving cash flow on that. And then I'll touch on these 2 royalties on Tocaninzhino in Brazil and Spring Valley in Nevada, because these 2 projects, to me, are like lottery tickets in our portfolio. And I say that because Tocaninzhino is not going to be built by Eldorado. They have indicated that many times, and most recently in their Q3 earnings call, they mentioned that it's on the chopping block, but that's okay, because I'd love to wake up one day and read a press release from Eldorado and whoever they're selling this asset to, that it's been sold, that the buyer is excited to start going toward production on this asset. It's ready. It has a full feasibility study. It's fully permitted, and that'll be a very good day for Sailfish's shares when that press release does go out. I'm hoping it's sooner rather than later. And same on Spring Valley. Spring Valley is held inside of a private equity firm called Waterton. They're based in Toronto. They're secretive. They're private, so no need to put out press releases, and they haven't on Spring Valley. And that's also, going to be a nice morning when we wake up and there's a press release that Waterton's finally sold Spring Valley. And this project has enough scale. It's the last time there was a public resource on the project, it was over 5 million ounces. And it's in Nevada in Pershing County with plenty of mines around it. Permitting shouldn't be, an issue. I know it is in other parts of the U.S., but not in Pershing County, Nevada. That's pretty much the only game in town for that part of the world. So, I love the upside that we have from these two projects, because I look forward to getting those press releases when they're actually sold and in the hands of people who want to develop them. And this other bullet here refers to Gavilanes, which we're working on a transaction, as it says here, to maximize value for shareholders. Gavilanes does not belong in Sailfish. We knew this when it went in, but at the price of US $1, it was well worth us taking it on. The holding costs are, not very much, about 180 grand a year in Mexican concession taxes. But we're working on something. We ask that you guys be patient. We think that there's another asset that would complement Gavilanes and create a real nice standalone company. So that's what we're working on. The exchange has a lot of requirements for companies to be spun out, and so we're going through those requirements, and it's probably going to take 3 months, maybe even a little longer to get something done. But we are highly motivated to do that. This past summer, we did a rights offering. There was debt that we had on our balance sheet from the transaction with Terrico last summer. It was about 12 million, including accrued interest, got up to about 13 million or so. That's been largely repaid. And that debt was to our largest shareholder, Wexford Capital. And we retained some cash to be able to advance Gavilanes and in a transaction that makes sense for investors. So I think that was a really good event. That was a highly oversubscribed rights offering. For any of you who participated in it, you had the ability to buy stock at $1 Canadian. Stock today is trading, I think, at $1.12, $1.14, and it's been much higher than that since the rights offering was closed. Another benefit of Sailfish, we've got a tight register. This is an almost unbelievable statistic. It's incredibly tight, and most of this is Wexford, right? Wexford's in there for almost 57%. But with 10 shareholders, I can account for about 70% of the stock, and that obviously includes management and a couple of individuals who vended the Tocaninzhino property into Sailfish and received cash and shares. And the final bullet, we, as I mentioned, have been buying back shares with all the excess cash that we have on our balance sheet. From June 2019 to June 2020, we repurchased 2.8 million shares. Most recently, we increased that buyback to be able to purchase another 3 million shares from July 2020 to July 2021. So far, we've repurchased and canceled 1.2 million or so. There are some shares that we've repurchased recently that have not yet canceled, so that number is higher, and we will update people before the end of the year on what that number is. But I saw a press release this morning that Cisco Royalties is amending their NCIB, their buyback. I think that going into the summer when we had a spike in gold, you had valuations get really high, which was good for some of these companies. But some of them have really sold off. I was looking at charts yesterday, and some of these smaller royalty companies are off anywhere from 50 to 80% from their August highs. And I'm surprised that they're not using their cash to buy back shares. I think part of that is that every junior royalty company is obsessed with growth, trying to get bigger, trying to grow the portfolio to get scale. I think that the way to do that is through consolidation, not through outright purchases of portfolios from large companies or producers who want to hive off a royalty for a really good price. That's just in a market where everything goes to an auction and there's a dozen people competing. You don't want to be the winner, unless you've got a really nice currency and you can just and you trade at 2 or 3 times NAV, which some of the big guys do. But as a lot of you guys should have all noticed, they haven't done anything. I can't remember the last royalty deal that Franco or that Royal or Wheaton has done, and that should tell people something, because these guys can buy royalties at a higher price than Sailfish, than Elemental, than a lot of these companies that are out there that are small or mid-size. And if the big guys aren't buying, and they have the currency to do so, it's a weird time. And again, I'm a big proponent of consolidation, and considering that I'm a shareholder and receiving no cash compensation of this company, it gives me a different perspective. I'm not worried about losing my job. I'm actually quite excited about that prospect, because I'd love to see what our company could look like with another company in a more diversified vehicle with more liquidity. So I think that's a unique position for Sailfish, and one that as a shareholder you guys should be happy about. Here's a timeline. As I said, this company was created privately in 2014 to facilitate a stream on an asset in Nicaragua, which is San Albino. In 2017, we were spun out on the back of an acquisition of Tocaninzhino. That royalty is at 3.5% NSR, but the operator has the ability to buy down 2% for $5.5 million, which they would be crazy not to. So we assume that is going to be about a 1.5% royalty on 1.7 million ounces of reserves in Brazil. So we use that to go public. So going back to 2014, it was just one stream on the asset in Nicaragua, and then it was a stream plus Tocaninzhino. And then we started trading in 2018. We restructured the stream in November of 2018 to facilitate the merger between Marlin and Golden Rain to form Mako. And we got a bunch of stuff, cash, other royalties, including El Compás, La Cigarra. We got Gavilanes for $1, so it was all, I think it was a great trade-off. Obviously, we were the ones structuring the deal. And then 2019 came around, and we had the opportunity to acquire Terraco Gold Corp for their 3% NSR on Spring Valley. I think that's going to go down as one of the great acquisitions in the royalty sector, because the opportunity to buy a royalty that can generate more than 10 million a year in cash flow, which I'm assuming that when Spring Valley is built, it'll be built to produce over 225, maybe even 250,000 ounces of gold per year. So today's gold price is 3%. That gets you, net of taxes, that gets you well over 10 million bucks. And for any of you who invest in the royalty sector, if I challenge you to find one royalty on any project in any portfolio, other than inside the big guys, but in the junior space, that's paying 10 million or more a year in cash flow. And I understand that that's still just a project. It's still in the hands of a private equity firm that's likely not going to build it. So you have to discount all that. But it is in Nevada, and it is gold, and it's large. And time in 3 years, 4 years, 5 years, who knows when. But that thing is going to be developed someday, and it's going to be one of the valuable royalties in our whole sector. So I was super excited when we got the chance to do that acquisition. We actually got our CFO from that acquisition, Brian McKenzie, for a little over a year. We had Todd Hilditch on our board, who was the CEO of that company, and I'm just excited for the future with regards to Spring Valley. We also got some debt, as I mentioned earlier. There was a $12 million convert that was due to Waterton, that private equity firm I mentioned that is the operator of the asset. We repaid that as part of the acquisition. And in 2020, we were able to do a rights offering to equitize the majority of that loan. There's only about $3 million left to pay to Wexford. Also in 2020, we sold the Almaden project, which came with Terrico. It's a gold project in Idaho, and we got about $1 million of cash in stock. We sold it to Gold Mining Inc., and we were able to use the proceeds from that to acquire shares. So that's pretty much the history. We haven't been around that long. We've been very opportunistic in how we structure things and we do things. As you can see, there's no mention of auctions or processes where we're out there killing ourselves to buy assets. These were all structured deals through relationships. The acquisition of Tocaninzhino was done using shares and cash to two individuals who discovered that project. All this stuff was under the radar. Here is our capital structure. This number is going to go down because there are some shares that we've yet to cancel. But per the presentation, 75.7 million shares at $1.09. That equates to just under 65 million US of market cap. We're trading pretty low. I mean, we have one royalty in our portfolio that when it's up and running, and I get it, might be 3 years, 4 years, 5 years, but alone we'll be generating 10 million a year plus of after-tax cash flow. The royalty in Nicaragua, when San Albino is at commercial scale, will be doing anywhere from $2.5 to $3 million a year, and that's coming on in weeks. So like every company that gives these presentations, I think we're cheap. And over time, Warren Buffett likes to say that in the short term, the stock market is a voting machine, but in the long term, it's a weighing machine. And if I go back to this slide, this is the weight we've been piling on. We've just done a bunch of things that I think were accretive and added a lot of value. And over time, we should be rewarded for that. You can see here, this is on a fully diluted basis. So take all the in-the-money options that management and directors and consultants have, and that comes out to about 9.7%. Wexford's at 54. You've got Mr. Paul Stevens over here with a big chunk. That's close to 5-6% of the company, and he's an incredibly supportive shareholder. We learn a lot from him every time we speak to him, and he's well connected. He knows what's going on in the space, and we're just proud to have him as one of our cornerstone shareholders here. The bios for the three officers. Here's myself, co-founder and CEO. I've been involved as an investor, as an operator. Working at Marlin, we built that La Trinidad open pit heap leach in Mexico. It's a tough mine. We got hit by hurricanes. We were in an area that was infested with cartel members. We went through the lows in gold, the gold price, but we came out of it stronger, more capable. Some of the selective open pit mining techniques that we developed in Mexico, we're now using in Nicaragua. So I think, Akiba was obviously there with me the whole time that we were doing this together. I think that our backgrounds as, I don't think you have people running royalty companies today that have these types of backgrounds where they came from being investors to getting thrown into the fire of the world of mining and operating mining assets. And we're also pretty good at structuring things. That's kind of our expertise before we started operating mines. So it's just a unique group of people. Brian McKenzie, as I said, came over from Terrico. He's been a CEO of public junior miners for many years. I love having him around. He's fast and he gets things done. And so I think this is a team. It's a small team. And if you look at some of the newer royalty companies that have come onto the scene, I've had a call with the guys at Nomad recently. They're structured very similar. 3 people, a lot of stock options, cash compensations is relatively muted. They're there to make money on the shares. And I think it's a new breed of young people that are in mining. I'll be 38 in January. Akiba's in his early 40s. Brian, I think, is about my age. And, we've seen the way some of the older guys have done it. And we want to do it differently. We want to make money if our shareholders make money. And so that's why we've created the compensation structure we've created. And that's just the way we're going to do it. Here is a summary of the portfolio. Since 2014, we've been piling things in here. As I said, we had that Almaden project in Idaho that we sold. We've got Gavilanes in here, which it doesn't belong in here. It's a property, not a royalty. We're working on something to get this out and in a creative way. And then we've got Spring Valley. Someday this is going to be a monster royalty. Moonlight, 2% around. It's essentially the property surrounding Spring Valley. La Cigarra, 1% on a property in Chihuahua. This is operated by Kootenay Silver. El Composites are only producing royalty, at least until January when San Albino gets on. And this is operated by Endeavor Silver. We used to own this property. And we sold it and kept a royalty at Marlin and then put the royalty into here. San Albino. This is, freak of nature, the highest grade open pit on the planet. We've got a stream equivalent to 3%. And why this is important is that it's structured in a way that we're going to get that 3% net of taxes. It's structured it's owned in the British Virgin Islands, and there will be no tax that is paid on this, no withholding tax for streams. It's considered active income and not passive income. And then we also have this 2% NSR on the area surrounding San Albino. So the 3% is only on about 3.5 square kilometers. The 2% is on about 134.5 square kilometers. It doesn't include some of the new concessions that have been acquired by Mako. Puerto Rios and La Segoviana does not include that, but it includes everything else that's within San Albino Mura and El Jicaro. And then we have Tocaninzhino down here in Brazil, 3.5% NSR, likely get bought down by 2%, so that's a 1.5%. On a feasibility stage project that Eldorado has indicated they're working on a sale. So I look forward to getting a press release when this thing is sold, same as Spring Valley, and put in the hands of somebody who actually wants to pour some gold. Summary of the 2 cornerstone assets, San Albino, Tocaninzhino, and I guess at this point I would just I'd like to open it up to questions and just start answering questions. This slide I like. It's in a lot of royalty presentations. Why is there so much capital going into royalties? Why is there so much interest? Because royalties in the precious metal sector have worked. They've worked fantastically well. This is going back to 2008. You can see here, the royalties are this blue line. This is gold. This is a GDX. GDXJ would even be below this. But over time, these things have just done so well. And part of the reason is that royalty companies, M&A within the royalty sector has worked, getting bigger. But it worked better when there were only 3 guys, 4 guys, call it Sandstorm came onto the scene around 2008. So, these guys had the pick of the litter, and they weren't, as far as I know, competing with each other too much. But part of the problem is that we now have a lot more names, And if we're all going after the same royalties, the price for those royalties is going to go up. As I've said many times before in this presentation, I think now is the time for consolidation. To take some of these portfolios that have already been created, including ours, and to put them together in a vehicle that has more liquidity, is more diversified. Not doubling up on management team either. And here at Sailfish, we have the rare quality that we're actually not getting paid in cash. So I only want to do what's good for my shares, not what's because that's what's good for me personally. That's the only way I'm being compensated here. There's no other ulterior motive for me. So with that, I will open it up to questions.
That actually provides a good segue to the first question we had, Caesar. So talking about the shares, what's the maximum price at which the company would buy back shares?
Good question. It has to be thought of in the context of what gold's doing, for example. If gold were 3,000 an ounce and our stock is $1.50, $1.50 today might sound like a really high price, but not in that context. We have bought back shares at higher prices than where we are trading today. It also depends on our cash position. After we sold that Almaden property, we had quite a bit of cash, and we sold those shares, when they became freely trading in Gold Mining Inc. So, do I think the shares are cheap today? Yeah. Have we been buying stock at these levels? Yes. Have we bought stock at higher levels? Also, yes. So it's hard for me to give a definitive answer, but I'll just give an answer on the context of today. We have been active in the market at these prices and higher.
Can you remind investors of what your NCIB is? I think you recently renewed it.
Yeah, so it's in here. So the first NCIB we did was for the year from June 19 to June 20. It was for 2.8 million shares. And we bought pretty much all of that. I think it was like 2.67 or something. And then we refreshed it in July. So we've got from July of this year to July of next year. And that's for up to 3 million shares. And of that, we've already bought and canceled 1.224 million, call it. There are more shares that we have purchased but yet to cancel that'll add to this number. But I'll just tell people we're not. I need to check, but I don't think we're yet over 2 million.
But your intention is to buy back the shares that have been announced in the NCIB. I know a lot of companies use it as a marketing tool or a signal to the market, but then they don't actually buy any of the shares back. But your intention is to continue to buy them back.
Yeah. And you know what I should do on this is I should add a bullet of what we actually bought. I mean, so this is what we've bought since July. There's more. We just haven't canceled them. And I should add a bullet as to what we bought from June 19 to June 20, because it was close to to what we were allowed to buy. I think it was almost 2.67 million. It's in our financials.
And then I had some questions on some of the other assets. So let's start with Spring Valley. So what's the latest on what's going on at Spring Valley? Can you provide a little bit of an update there?
Yeah. So let me switch over to a slide here that I like. This shows a side by side of Spring Valley with other gold projects in the mostly in North America. So because Spring Valley is owned by Waterton, we don't get very much data. One of our former directors, Todd Hilditch, who was a CEO of Terrico, he is constantly poking around in the Pershing County office for permits, in order to drill or to discharge water or to actually get permits to build stuff. You have to go to the county office. And so we see some of that activity. We know that Waterton has been very active on Spring Valley. They paid quite a bit of money for it when they acquired it, and I'm pretty sure it's if it's not the flagship asset, it's one of the larger assets in their portfolio. So they're adding as much value as they possibly can to get, corresponding value when they sell it. But it is tough to get info, right? And if Spring Valley were in the hands of Barrick or Newmont, we would have never had a chance to buy Terrico. I mean, Terrico would have been a multi-$100 million, publicly traded royalty company. Probably would have already been sold to one of the big guys, Franco or Royal or Wheaton. But it wasn't, because Waterton owned the asset where they had the royalty, Spring Valley, and they don't talk about what they're doing. They don't have to. They're a private equity firm. They will definitely talk it up when it's time to sell it, and there'll be a teaser that goes around. I haven't been privy to that document. I don't know if that document exists. If we take a look at what this project could be, we had a firm out of Toronto called Red Cloud put together an analysis of Spring Valley and compare it to some of these other development projects around the world, mostly in the Americas, and it shows really well. You can see here, Spring Valley is the one in the red rectangle, and I mean, a project like this should be of interest to just about any gold mining company. The mid-tier guys, the big caps, and as I said, I'm just waiting for that press release to go out one day saying that it's been sold, because we don't really talk to Waterton too much, but what we hear is that they don't have the or they don't have the intent to build it, so they have to sell it.
Okay. And then turning to Gavilanes, how much do you view it as being worth as a standalone? I'm sure you haven't determined exactly what you're going to do with the spin out, et cetera, but when you look at valuing that asset, like, how do you think about that?
Yeah, so there are a handful of silver companies that are at the same stage as Gavilanes. They have a resource. They're in interesting parts of Mexico. Gavilanes is right next door to San Dimas, which is one of Mexico's most prolific mines. It's a gold and silver mine owned by First Majestic. It used to be inside of a company called Primero. So we're 25 kilometers to the east. We've got a nice land package. It's about 13,000 hectares, mostly contiguous. We acquired a concession called Guadalupe from Freer over at Silvercrest shortly after we had acquired Gavilanes. So it's a nice package. And if you look at some of these silver companies that are out there that have maybe not even as many ounces as this project does on a historical basis, it's got about 34 million silver equivalent ounces at pretty good grades. They're trading at 40, 50, 60 million market cap, some even higher. But they've got dedicated management teams, and they're out doing all the marketing. And we've got Gavilanes tucked away inside of our royalty company, which is why we want to get it out. But we can't just push it out and have it sitting there in a vehicle without a dedicated management team, without any capital to go and do anything, right? So what we are hoping to do is to combine it with another asset that'll give it the scale to attract an independent management team, a dedicated management team, to come in and run it, that'll allow that company to raise capital right from the beginning, to start doing work, not only on Gavilanes, but on this other asset. And hopefully we'll have a press release at some point in the next month or so that discusses those plans, so that investors can start valuing that and what it could be worth. But we underestimated how complex this transaction could become, and also the requirements by the exchange. The exchange, especially because this other asset is in the hands of our largest shareholder, and there are related party issues that they've brought up. So we want to make sure that everything's done above board, and that we comply with all the requirements, and it's just taking longer.
Got it. I don't see any other questions coming in, Caesar. Is there anything that you wanted to cover in more detail?
No, I was hoping for more questions because I like questions from our shareholders. They're the ones who are poking around, and also they're able to they own other royalty companies, which we can get their feedback on what we're doing versus other people. And I hope people understand our strategy here. Why haven't we done a deal? Well, we did a transformative deal in August of last year, that Terrico acquisition. And I think people would be upset if we were to pull the trigger on something that would make our stock go down. And what we're seeing right now, when we get these teasers for royalty portfolios, and I call the banker, I say, oh, I looked at this a couple of years ago. So what's the process? Oh, you have to sign a CA. Okay, how many people have signed CAs? About 13. And I just got the email this morning. Yeah, people are moving fast. It's like, that has never been our game. We don't do well at competing for things like that. We do well when there are opportunistic transactions to be had under the radar, negotiated. So I hope that investors in this company realize that we're being disciplined, and just look at the big guys. What have they done? Nothing. They must know something that all these other little guys don't. And I know that people are trying to grow because they just got out of the gates and they want to, grow their portfolio. I get it. But I think the way to do that is through mergers. There's plenty of royalties already in portfolios. Let's start getting some of these together to create scale that way.
Okay, so you speak of consolidation in the junior royalty space. What is the format? Mergers, buyouts, realignment of assets?
No, mergers where you get company A and company B, and they both think they're cheap. Okay, well, let's get together. One side runs the company, but you have the benefit of increased liquidity, of diversification of the asset base. That way. Mark Bristow, when he came onto the scene through the merger between Randgold and Barrick, I think changed the name of the game. There's some mergers that make sense where there's a premium involved, and sometimes there are mergers that need to happen, closer to where the market is. But just people, need to be a little more. I think need to be a little more aggressive in at least just having these conversations.
Are there any consolidation opportunities in process or under discussion that you can talk about?
No, I wouldn't feel comfortable talking about any of these. But look, I'm having an investor presentation where it's somewhat of a public forum, and I'm talking about consolidation. I'm an open book. If I get a phone call from a CEO of another junior royalty company, I'm going to pick up that phone and I'm going to have a conversation with them. So nothing specific, but it's more just me giving the view of management of this company, where we are, what we think would be attractive.
But you are looking at opportunities all the time.
Yeah.
Okay. And you paid a dividend this year. Do you plan to pay dividend in the future? Is this going to be an ongoing strategy?
We didn't pay a dividend.
Oh.
We bought back shares. Yeah.
Sorry about that, Cesar. I should have known that one.
No worries.
I have one last question, which is usually how I like to end things anyway, which is, can you talk about the immediate milestones to watch for over the next 6 months?
Oh yeah, it's all Nicaragua, San Albino. That cash coming out of the ground, the gold coming out of the ground is going to be cash coming to us. And we've already set up our gold trading business in the British Virgin Islands. We've got a local London account through RBC that we're ready to start crediting with some gold credits. So I can't wait. We have that small cash coming in from El Compás, but this is going to be a game changer. And once we get to a steady state, I'm thinking April, May over in Nicaragua, and we're getting, the significant cash flow. We're just going to use that to buy back shares.
And just before we end off, do you want to hit on the main selling features of the company, why you think investors should care about buying shares in Sailfish?
Yeah, it's a company that was created by shareholders, for shareholders. We run an incredibly lean overhead. We've been opportunistic. We haven't done transactions that have broken the bank. We've tried to use our equity whenever possible, um, and we think we're pretty good at identifying value. That this Spring Valley acquisition last year was a game changer. We have an asset now that I can't tell you exactly when, but in this gold environment, should be sooner rather than later. There's going to be a transaction where it leaves the hands of a secret private equity firm and goes into the hands of a company that puts out press releases about the size of the deposit and how permitting's advancing and all those things that investors like to see. And that royalty is a world scale royalty. I'm telling you, for all of you investors out there, go and find me a greater than $10 million a year royalty, gold in Nevada, inside of one of these junior mining companies. Just they don't exist. Most of these royalties are 3 million, 5 million. And this is it's a world-class royalty that, in the right hands with a development timeline, I think is going to be worth a lot, and definitely once it's in production. So yeah, those are the big things for me.
We had one more question come in. What's the priorities for the coming cash flow? Stock buybacks, reduce debt, acquire royalties, other? Do you want to prioritize those?
That's a good question, actually, because I've been talking about buybacks, but we will clean up that $3.2 million of debt that's left over to Wexford. That is a priority. So when we start generating cash flow from San Albino, we'll use cash to pay that down.
Great. I don't see any other questions coming in. So thanks, Caesar, for walking us through the story. I think it's an interesting time to be looking at Sailfish or Mako from an investment perspective. A number of things happened, as you alluded to, with the two hurricanes this fall. For Mako, the stock came off the 4-month hold also, I believe, in November, which created some downward pressure on the stock. And I think that we are seeing some tax loss selling in here. Seemed to have bottomed out last week, which coincided with the expiry of some options from former management or former directors, sorry. So I think it's an interesting opportunity to be looking at both the names here. So I think investors should be sharpening their pencil and taking advantage of some of the weakness that we're seeing in December selling. Do you have anything to add, Caesar?
Yeah, I just realized, I'd like to show people what's actually going on in Nicaragua just briefly. Let me share my screen. I have a camera. I have 2 cameras actually that allow me to check in on things real time. And for those who are worried about the hurricane causing any damage, I know my partner Akiba likes to be on Twitter and talk or show people pictures. But this is real time. I mean, this is, you can see here we're making progress. I mean, that tailing storage facility we're going to be done lining it sometime next week. It's just about done. That stood up really well during the hurricane. There's the processing plant, beautiful countryside, but we're weeks away. And that is the most exciting thing about this company is that, we've got one of our cornerstone assets inside of Sailfish that's going to start receiving cash from this, the royalty on this project. It's a big milestone.
That's really cool.
Yeah. So with that, I'll leave it there.
Perfect. Well, thank you everyone for participating. If you have any other questions, feel free to reach out and get get those answered for you. And thanks for taking the time, Caesar.
Yeah, thank you, Deb.